Imagine two neighbors, same car, same driving record, same zip code. One pays 30% more for insurance than the other. The only difference is a number that has nothing to do with how either of them drives. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, I want to talk about a number that quietly follows you around and sets the price on things you would never expect. Here's something most people do not know. The majority of insurance companies in this country use what is called a credit-based insurance score to help set your price. Not your driving record, not your claims history, your credit. Now, there are exceptions. 4 states ban the practice for insurance: California, Massachusetts, Michigan, and Hawaii. If you live here in California, your insurer cannot price your policy off your credit. Some states allow it only for property insurance, like auto and home. Other states allow it for almost any kind of insurance. So if you're in California, you might be thinking, great, my credit does not matter. Hold on, because your credit score still sets the price on the single biggest expense in your life, your mortgage. So what does this actually mean for you? Let me explain how the insurance side works first, because it teaches you something. When an insurance company looks at your credit-based insurance score, it is just one factor. With auto insurance, they also look at your zip code, the age of the driver, the make, model, and age of the car, and how many miles you drive each year. Credit is one piece of the puzzle. So why do they use it at all? Research has shown that people with lower credit scores tend to file more claims. The insurance companies are playing the odds. Fair or not, that is the system in most states. Here's what you can do about it. You can ask your insurance company a simple question. Ask whether a credit-based insurance score was used to underwrite and price your policy, and which risk category they placed you in. Most people never ask. You should. And if you want to improve that score, the steps are the same ones that improve your regular credit. Make your payments on time, clear up old disputes, keep your credit card balances low. Boring. Simple. It works. Now let me bring this home, because this is where it gets real. Picture a homeowner here in Southern California with a $655,000 mortgage. 2 people can walk into the same lender on the same day wanting the same loan. One has a strong credit score, one does not. They do not get the same payment. The person with weaker credit can pay hundreds of dollars more every single month for the exact same house. Over 30 years, that is not hundreds, that is tens of thousands of dollars. Same house, same loan amount, different credit. And remember, here in California, home prices run about double the national average. So a gap that costs a family in another state a certain amount costs a California family roughly twice as much. The stakes are simply higher here. That is not a rate quote or an offer. Your actual rate will vary based on credit, equity, property, and lender. Not all borrowers will qualify, but the principle holds. Your credit score is one of the most expensive numbers in your life. This is why I always say strategy beats rate, always. Because chasing a rate without fixing the things that drive the rate is backwards. Your credit, your liquidity, your whole household picture, that is the strategy. The rate is just the result. Quick but important note, I do not sell insurance. I am a certified liability advisor and a mortgage professional. When you need insurance, I refer you to trusted insurance agents who do that for a living. My job is to help you see how all these numbers connect and to make sure your mortgage strategy is built around your whole financial life, not just one rate on one loan. So here's your first step. I want to give you access to 2 tools. The first is a way to check and monitor your credit. If you're going to have your credit pulled or you just want to know where you stand, go to rsrlinks.com/FICO. That's rsrlinks.com/FICO. That shows you the number that everyone else is already looking at. Then go to rsrlinks.com/KeySteps. That's where I give you access to credit monitoring, a real budget, and a way to track your assets. It is the same place I send families who want to take control of the numbers that control their money. Check your score at rsrlinks.com/FICO. Get your next steps at rsrlinks.com/KeySteps. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment, brought to you by rsrlinks.com/debtfree.